5 weeks. 5 straight weeks of losses on Wall Street, and nobody, not the Fed, not the Treasury, not a single person in Washington, seems to have a plan to stop the bleeding. The Nasdaq just closed another brutal week, down 2%, and is now flirting with official correction territory, 10% below its peak. The S&P 500 has lost nearly 6% since January. Microsoft is down 20% this year. Tesla, same story. Amazon, down 10. And that is just the beginning of what we need to talk about today. The Federal Reserve just sent a signal that has traders panicking. Iran's supreme leader might be on his deathbed, and his son, the one everyone assumed would take over, was severely wounded. Oh, and the President of the United States just claimed a 100% approval rating. We will get to all of it. But first, if you find this kind of honest, no-nonsense reporting valuable, hit that like button and subscribe. We put serious work into research and fact-checking to bring you the truth, not headlines. And if you really want to help us keep going, consider using the Super Thanks button or becoming a channel sponsor. It means more than you know. Now back to the markets. What makes this sell-off different from a routine correction is the word nobody in finance wants to hear. Stagflation. That is when inflation keeps climbing while the economy slows down at the same time. It is the worst of both worlds, and it is exactly what the data is showing right now. Normally, when stocks fall, investors run to bonds or gold. Safe havens, right? Not this time. Bonds are under pressure because yields keep rising. Gold, which should be soaring, has actually dropped 10% since the conflict in the Gulf began. Think about that. The traditional playbook is broken, and here is where it gets really alarming. Prediction markets now show a 20% chance the Fed will actually raise interest rates this year. Just weeks ago, that number was 6%. The expectation of rate cuts has completely evaporated. Bloomberg reported a 50% probability the Fed will not cut rates at all. The yield on 10-year Treasury bonds hit nearly 4.4%, a 3-month high. You know what that means for anyone with a mortgage, a car loan, or a credit card. It means the cost of everything tied to borrowing just went up again. But the story that truly keeps me up at night right now is energy. Brent crude is above $110 a barrel. Jet fuel has crossed $200 a barrel. Let that sink in. Delta and American Airlines each warned of $400 million in quarterly losses just from fuel costs alone. Some regional airports are physically running out of fuel. Flights could be cancelled not because of weather or staffing, but because there is literally nothing to put in the tanks. And it does not stop there. Qatar Energy just issued a warning that could reshape the global energy map. They flagged potential force majeure on liquefied natural gas supplies for the next 5 years. 5 years. Qatar handles roughly 1/5 of all global LNG trade. Asian refineries are scrambling because physical oil deliveries are trading at massive premiums over futures contracts. The world's energy supply chain is fracturing in real time. You see where this is going, right? If you are watching this and thinking this does not affect you, think again. Every product you buy, every flight you take, every bill you pay is connected to energy prices. When jet fuel doubles, your summer vacation gets a lot more expensive, or it disappears entirely. Meanwhile, at the top of the Iranian regime, something extraordinary is happening. The supreme leader's health is uncertain. Intelligence officials have confirmed that Iran's command structure is, quote, weakened but still intact. But here is the part that changes everything. His son, the presumed successor, was severely injured in an Israeli strike. That is not just a military blow, that is a succession crisis. Who is making decisions in Tehran right now? Nobody seems to know for certain. And in that vacuum, the Revolutionary Guard has reportedly started charging $2 million per tanker for passage through the Strait of Hormuz. They are essentially running a toll booth on one of the most critical shipping lanes on the planet. The question Washington is now quietly debating is whether to send ground forces into Iran to secure enriched uranium stockpiles. Let me say that again. Ground forces in Iran. While the regime's leadership is fractured, while the Pentagon has already asked Congress for $200 billion for this conflict. $200 billion. That is roughly 2/3 of the entire annual defense budget requested in a single supplemental package. Now, speaking of disconnects from reality, let us talk about the president for a moment. This week, he claimed a 100% approval rating, citing a CNN poll. Sounds impressive, right? Except that poll surveyed about 1,000 self-identified Republicans, and the 100% figure applied only to MAGA loyalists within that sample. In actual broad-based polling, his approval sits at 38%. That is not spin, that is just math. And here is the interesting footnote. According to the Wall Street Journal, the administration has quietly begun softening its stance on deportations because of those falling numbers. The new focus is only on those who have committed additional crimes, a rather significant pivot from the original rhetoric. If you're finding this useful, do me a favor, drop a comment below. Tell me what story concerns you most. The algorithm actually notices when you engage, and it helps more people find this channel. That matters. Now back to a story that perfectly captures the mood of this moment. United Airlines just reported one of the best sales months in company history. Sounds like good news, right? It is not. What is actually happening is panic buying. People are booking flights now because they know prices are about to skyrocket. The CEO has already started cutting unprofitable routes. If fuel stays anywhere near current levels through the summer, demand will collapse. This is the sugar high before the crash. And that brings us to the story that ties everything together. The one that reveals just how desperate things have become behind the scenes. The United States just lifted sanctions on 140 million barrels of Iranian oil sitting in tankers for 30 days to try to keep fuel prices from spiraling even further. Think about the irony. We are at war with Iran and simultaneously releasing their oil onto the market because we cannot afford our own energy costs. But wait, it actually gets stranger. The Treasury Department also issued a general license allowing transactions involving Russian oil that was loaded onto ships before mid-March. 2 Russian tankers are reportedly heading to Cuba right now, carrying what would be the first energy supplies to reach the island in nearly 3 months, ever since the American energy blockade began. So we are sanctioning Russia for invading Ukraine while quietly allowing their oil to flow when it suits us. The global energy system is not just under stress, it is being held together with contradictions and duct tape. And the beneficiaries? Nuclear power, coal, and American LNG producers. Not exactly the clean energy future anyone had in mind. Every video you see on this channel starts with hours of research, cross-referencing sources, checking facts, separating real information from noise. That is not easy work, but it is necessary work, especially right now when the truth feels harder to find than ever. If you want to support what we do here, the simplest thing is to hit like and subscribe. It sounds small, but the algorithm uses those signals to decide who sees this video. Your click literally determines whether 10 people watch this or 10,000. If you want to go a step further, the super thanks button or channel membership directly fuels this operation. No corporate sponsors, no agenda, just honest analysis backed by real research. Leave a comment, share your thoughts, tell me where you think this is all heading. This community gets smarter every single day, and that is because of you. Thank you for being here.